Everyone's talking about AI. Is it going to make your favorite software totally obsolete? Well, to get to the bottom of it, we're going to look somewhere most people don't, inside corporate financial reports. It's a story about a very real threat and an even more interesting response. Let's dive in. So, how does a public company actually tell its story? Well, it's not nearly as simple as you might think. Turns out they're not just telling one story. Public companies communicate in two really distinct and honestly often dramatically different ways. On one hand, you've got the official record. This is the Form 10-K. It's a dense, legally required document, basically the official report card of everything that's already happened. But on the other hand, you have the public narrative. That's the earnings call. This is the forward-looking story, the vision they sell to investors to get them excited about the future. And here you go. This is what a real 10-K looks like. As you can see, it's just pages and pages of dense, legally vetted text. Not exactly a page-turner, right? It's built for compliance and accuracy, not for a casual read. So the most important thing to remember is this. The 10-K is a super comprehensive summary of a company's financial performance. It's required by the SEC, and it is the official, backward-looking record of fact, period. All right, so now that we get the two sides of the coin, the official record and the public story, let's see how this whole thing plays out with a real company facing a very modern and very real threat. So let's dive into our case study, a software company called nCino. They operate right at the intersection of banking, software, and, you guessed it, artificial intelligence. So what do they actually do? Well, in their own words, right from their reports, nCino provides a cloud-based bank operating system. Think of it like this. They build the modern digital plumbing that banks use for pretty much everything, from lending money to opening new accounts. And they operate on a model I am sure you've heard of, SaaS, or software as a service. Basically, banks subscribe to their software and pay an ongoing fee. And this business model, well, it's absolutely critical to the conflict at the heart of our story. Because for the past few years, there's been this powerful narrative brewing that AI is coming to completely replace the entire SaaS business model. The fear is that these super intelligent AI agents could just do all the tasks that complex software does now, but for way, way cheaper, making companies like nCino obsolete. And nCino knows it. In their earnings call, the CEO, Sean Desmond, addresses this threat head-on. He says, I want to spend a few minutes addressing the elephant in the room, as we have all heard the narrative that AI will replace SaaS. So, he's not hiding from it, he's confronting it directly. So, what do? How do they respond? Well, not by running away from AI, but by making a huge strategic bet on it. Let's break down their narrative. His core argument is fascinating. He claims the very thing that makes banking so complicated, all the heavy regulation, is actually their greatest defense. He says the highly regulated business of banking is different. We believe AI will be a tremendous tailwind for nCino. So instead of a threat, he's flipping it and framing AI as this massive opportunity. Their earnings call lays out a super clear three-step strategy. Okay, first, the foundation. AI can't just run wild in a bank. It needs a compliant, structured system to run on, a system like nCino. Second, the data moat. AI is hungry for data, and nCino has this unique proprietary feast of data from almost 500 different banks. And third, the AI agents. They deploy their own AI, what they call digital partners, inside this trusted, auditable platform. It's like a walled garden for banking AI. It's a great story, right? A really powerful narrative. But remember, that's just one side of the equation. Is the bet actually working? For that, we have to leave the narrative and go to the numbers, the cold, hard data from their official reports. And this, my friends, is where the story gets really compelling. Their annual contract value, or ACV, grew 17% year over year to over $600 million. Their net retention is 112%, which means their existing customers are actually spending more. And look at this last one. Usage of their AI tools grew over 25 times in just 5 months. The adoption is real, and it is happening fast. And just so we're all on the same page, ACV is a core metric for any SaaS company. It represents the value of all their subscription contracts. That's 17% growth. That's a huge signal of health and serious momentum. So, how did the financial world react to all this? Well, Wall Street analysts, the pros, they were expecting earnings per share of about 21 cents. nCino came in and delivered 37 cents. They didn't just meet expectations, they blew them out of the water. And the market noticed immediately. The day they announced these results, marrying that strong narrative with these strong numbers, the stock jumped almost 10%. That is a real-world financial impact right there. Okay, let's zoom back out for a minute. What does the story of this one company successfully navigating the AI threat tell us about the broader future of the entire software industry? So here's the crucial takeaway. In these complex, highly regulated industries, the threat of AI can actually be flipped into a massive opportunity. It seems like AI doesn't replace trusted platforms, it makes them more valuable. They become these essential gatekeepers, providing the special data and the compliant guardrails that powerful AI needs to function safely and effectively. And that leaves us with a fascinating question. As AI gets embedded into, well, everything, will every major industry need its own AI gatekeeper, a trusted, specialized platform to manage the risk and unlock the rewards? nCino is betting its entire future that the answer, at least in banking, is a resounding yes.